What's up, everyone? It's Hey John, and today we're seeing Uncle J Powell, the Burr printer. He is telling Congress that, you know what? Recession is a possibility, really now, and that the Fed is committed to tackling inflation and bringing it down to the incredible 2% target. Now, the only question is this possible? Given the way current inflation is it possible that they are able to increase rates to the point where it destroys so many assets and they are able to bring inflation down, but at what cost? And if inflation is taken away, then what's next? Deflation or stagflation? Stagflation is the one you do not want to see happen. Deflation, it's already happening due to the interest rate hiking. But will we reach a point where, okay, our growth is going to flatline and trade sideways for the next decade? Powell tells Congress the Fed is strongly committed on inflation. Notes recession is a possibility. Well, this is the same Fed that was saying everything is transitory. But as we know, we live in the real world. We know that none of this is transitory because we've been living through it for the past several years. We've seen our prices continue to increase nonstop. But have you seen your wage increase? So that means that they will continue to raise rates, but when they raise rates, they will raise it and then wait a few months to see what the impact is. Does it truly bring down the inflation rate? If it's demand destruction, is it really fixing inflation when you're saying, hey, you know what? I'm going to price everything expensive so you just can't buy it. I don't know how I feel about that. How do you feel about that? And the thing here is that as the rates continue to increase, and they will, the only difference is that we will not be seeing the 75 basis points as we've seen the last time. The thing here is that we're going to see continual rate hikes, but they will be on a much smaller scale. In the meantime, and in September, that's when we will see the pivotal point where, okay, let's reevaluate everything and say, hey, you know what? Has these rates been beneficial or have they been harmful? So what should we do? And do you understand that midterms are coming up? And of course, the current sitting president, they want to get reelected. So how are they going to do so? Well, when you see sky high energy rates and when you see inflation increasing and interest rate increasing, that doesn't bode well for the current sitting president if they want to get reelected. So you're going to start seeing them implement more policies to decrease energy prices, to decrease rates, and to make the consumer, the retailer, the common voter, to feel a little more wealthy and to feel like, you know what, this administration, they know what they're doing, so they will get my vote again. A very interesting phenomenon is that people have very short memories. They can get hurt by high interest rates and all this kind of stuff, but after a few months, as the next news cycle moves around, and if it's better for them at that point in time, well, let bygones be bygones. And this will most likely happen. So in my opinion, I suspect that by September and near the end of the year, this game of interest rate hike chicken, I think the Fed's going to chicken out and they may even remove rates and even decrease it again, thereby making the current sitting president look more appealing and sending the economy way higher. But of course, this is all speculation and we need to wait and see to see how it plays out. But I want to give you some of my rationales in terms of why I think that this could possibly happen, and I think it's very likely as well. Another algorithmic stablecoin has fallen below its $1 peg, but experts say it's not Terra 2.0. Woo! Another Terra 2.0. Oh my God. Get me a blanket and hide me under the bed. I do not want to hear about another Terra Luna 2.0. So what is USDD exactly? USDD is another algorithmic stablecoin. This means that it's not traded by anyone. It's sort of like a DAO in a sense where it has certain functions built in. If it does this, it will do that. It's very predictable and it's meant to be unmanaged by anyone. While this sounds great and everything, understand that this also has a major flaw. The major flaw is that it's backed by other cryptocurrency and it has a blockchain built and it's called Tron. It's supposed to compete with Ethereum. This is very similar to the Terra Luna situation. So USDD is pegged and collateralized by other cryptocurrencies. And you know how that worked out the first time was Terra Luna 2.0. It brought down tons of crypto with it. And the idea of using a highly volatile cryptocurrency to back your stablecoin, it almost doesn't make sense. Because if you see a 50% drop, a 25% drop, that's a huge impact on your stablecoin. Now, USDD does offer a generous 39%. And we know how sustainable that will be, right? Anchor was 20%, and you know what happened there, folks. It was not sustainable. Long story short, TLDR. I do agree with the experts in this case, though, only because USDD only has around 10,000 members or 10,000 users. So it's a far cry from Terra Luna, where they had millions of users. So this is more of a drop in a bucket. If it falls apart, that's okay. Who really cares? But this is a sign of things to come, folks. We're going to see more stable coins fall apart at the seams because people will start losing trust. Because, well, if your stable coin gets depegged and it becomes unstable for long term, well, why in the heck would you go into that? You might as well stay invested with your current cryptocurrency, right? USDD is currently priced at 97.25. So you can see that it's currently depegging from $1. And you can see Tron here. It's literally trading where it was last year. So it's been up to the highs and now it's trading back down at the lows of near last year. This does not look too bad if you're looking for a position, but of course, it's up to you. Make sure you do your own due diligence. I'm just explaining to you guys that from a chart perspective, it doesn't look too bad, but given the current macroeconomic climate, who the heck knows, right? So you can see Tron, and you can see, of course, USDD is trading about 2.75% decreased from the current $1 price. But USDD does say that, you know what, a plus or minus variance of 3% is acceptable. So currently we're trading at 2.75%. So you know what, let's go ahead and say it looks okay for now, but make sure if you guys are in it, make sure you watch it like a hawk, or you just pull out and do your own thing and put it somewhere more safe. USDC's real volume flips Tether on Ethereum as total supply hits $55.9 billion. So we're seeing USDC starting to take some of USDT's market share. And why is that? It's because USDT is touted as, you know what, they're being a little shady. They're not being super duper transparent. So I'm a little, well, scared after seeing Terra Luna and UST. I don't know how stable these coins are really. I don't really know what you really do behind the scenes. I don't really trust you. So I'm going to pull my money out while I still can, because you don't want to be in a position where you're like BitBoy Crypto in Celsius, where you now have $3 million of your Ethereum. Well, it's stuck there and probably going to vanish most likely. So people are pulling out in droves, and you're seeing USDT lose over $20 billion in market cap. So what is USDT's response to all this? Let's go ahead and get an audit from a top 4 accounting firm to prove to all you guys that we are good to go. And the reason why USDT has decided to do this now is because they're seeing a mass exodus of users on their platform and they're losing money. So they're like, okay, guys, we gotta do it now. Before it was an expense, we don't want to pay for it. But now, you know what, let's pay for it, guys. It'll be well worth it. We want to get legitimized. We want to make sure we dot our I's and we cross our T's. Toronto stock slide. Crypto platform Voyager digital plummets on a 3AC exposure risk. So Voyager has $300 million in USDC, and they have 15,000 BTC tied to 3AC, 3 Arrow Capital. So we're seeing Voyager, well, they aren't looking too good as a platform now because they have extreme risk. And we are seeing all of these lending platforms, they aren't looking too stable. All of this easy money, it comes from somewhere, and everything is exposed when everything is going down. When everything's going up, it's easy to hide it because everything's green. But when it's all red, everyone's like, hey, where's my money? Hey, why can't I withdraw? And now we're seeing the markets. It continues to fall apart. I've said it once, I've said it twice, and I will say it again. If you made it this far, make sure that you are your own central bank. What does this mean? It basically means that not your keys, not your crypto. That means move your crypto from a central exchange onto a DeFi wallet where you own everything, where if it messes up, it's because of you. Wouldn't you rather have you make your own mistakes than let some company do it for you. That's what I prefer personally speaking, and that's where I have the majority of my money. It's on a DeFi wallet. It's not on a central exchange. I only use the central exchange when I want to cash out into US dollars into my ACH, aka bank account. Make sure you guys like, share, and subscribe because it really helps the channel out, and I'll catch you all on the next one. Shh.